Hello friends and welcome to my YouTube channel Simply Talks, and today I'm going to talk about BIRLASOFT, which can do extremely well over the next 12 months. So let's understand about the business and let's see what my targets are from a 1 year perspective. So let's get started. First of all, disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about BirlaSoft, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll get access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join me on YouTube as well, or you can email me for that. Now about the company, BirlaSoft was established in 1990. It is a part of the Birla Group and provides digital solution and enterprise services and automation processes to different clients. Their major sectors that they serve to are automotive, engineering, you can say energy, insurance, capital markets, life sciences, and manufacturing. They have presence in North America, Middle East, and Asia Pacific. So a global player is BirlaSoft and doing extremely well. The market cap of the company is around 13,500 crores at the moment. If you look at the financials, then sales went up by around 21% in the last quarter, that's the December quarter, and profit went up by around 18%. Not a great profit growth, but it did well on the sales front. A zero debt company, low promoter but high institutional holding at 40%, which is a big positive. Return on equity of 16% and not that strong but not bad either. Margins of 16% is pretty decent for the industry. It is at par, just above par for the industry. If you look at the performance, then it is a big outperformer in the last 12 months, has done exceedingly well, and it has been consolidating recently. In fact, it declined during February, March, and have been around 470, 480 at the moment. It has been delivering very decent margins, very strong results, and it recovered extremely swiftly from the March lows. It went to 360, 370 levels and has come back with a vengeance towards 480. The valuations are reasonable. I won't say very attractive because around 370, 380 looked very attractive, but right now, reasonable valuation is there, and there is upside in the stock at the moment. So I believe it can grow between 25 to 30% even from current levels, if you see from 480 levels. So demand to remain robust, I believe numbers would be strong, at least for the next 2 quarters. Numbers should be strong from the March and June quarter, and probably we'll see management commentary from June onwards as to how things pan out. But it looks like for the next 2 3 years, demand for IT businesses and this service sector should be strong with the high dollar at the moment, and a lot of things happening in other sectors. People will get into stocks which are more safer in nature, like in the mid-cap IT domain. It has shown a strength technically, once falling to 360, 370, now at 480 levels. It's 50 and 100 DMAs around 460, so looks a very decent support around 460, technically looking extremely strong towards going towards 520, 540 at the moment. Reasonable valuations which are set to expand. I believe the valuations are all set to expand, could go to 40 50 times earnings, 40 45 times, currently trading at 28 30 times. So can go up 20 30% on the valuations front as well. So it can give you 25 30% from 480 levels, even from a 1 year perspective till next March. And global demand for technology will only pick up as things move on, as we move into the future. I think technology will be the name of the game. This decade could belong to technology, so that's where you need to invest big. So if you look at the technicals, have surged from April 2021 onwards. At that time, it was around 320, 330 levels. 430 looks a very strong support in my opinion, and any level closer to 460, 465 455 to 465 could be very good levels to accumulate from a 1 year perspective. It looks extremely strong on the long term charts, and the breakout is expected just nearby from 490. So any close above 490, we could see a real surge of 10-15% on the stock. May continue consolidation for a few weeks after this move because the market doesn't look that great. So 470, 480 could be the consolidation zone, and that would be very good levels to accumulate the stock. So can be bought here on or on all dips. Stop loss for you is here 430, and target is around 550, 600 in 1 year time frame. So in my opinion, one can accumulate on major declines or at current levels around 450, 460 would be best, around 460 levels. But even from here, you can start buying and then buy on dips. In terms of numbers and fundamentals, all look very strong at the moment and should give you 25-30%, so around 560 to 600. A target is reasonably expected over the next 1 year. It may test your patience for a few weeks, about a couple of months, but the things should get going once March results are out. So numbers need to be consistent, numbers need to be good. So if numbers are reversed or numbers doesn't come out to be as expected, then the stock will get a beating. So kindly take that on note, and that is why you have a stop loss of around 430 on this stock and have less than 5% exposure into such stocks. So this was a video on BIRLASOFT. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.